So Carcrowd is a what we call a syndicated investment platform. So effectively allowing people to join together to own a fast appreciating asset. The aim of the business really is to democratize collectible car investments. The asset class has been utilized by ultra high net worth, people like Sultan of Brunei and Ralph Lauren, J-Lo, some of the really big billionaires really globally have invested in cars because they understand they're a real world asset, they're tangible, they're kind of globally liquid, they can be sold all over the world, they transcend a lot of the issues that happen with kind of global economies because they are beautiful things, and people around the world are very passionate about them. However, from a private investment perspective, no one really does it, and no one really allows people to invest in them. So you have to really be someone who can store, insure, maintain, source, have a big collection of your own in order to be able to invest in these cars previously. And that's what at the Carcrowd we're trying to remove those barriers to entry, utilizing our expertise, our investment thesis. I've been around cars since I was 4 years old, and managing collections for over 20 years, and we have a very data-led approach to picking those cars and then offering them out to people going to their own from any appreciation.
We've
Together.
we've just lost David for a moment. I think the Wi-Fi is just down. Hopefully we'll get him back shortly. David, are you still with us? Can you still hear us? I think I've just lost visuals.
Yeah, I can still hear you fine.
Wonderful. Okay, we'll get you on the.
I can still hear you fine. Can you not hear me?
No, I can hear you. I just can't see you. That's all. I think it's amazing what you're doing with the Carcrowd. Talk me through how you've been able to take that unique trust of the Racehorse Syndicate and apply it to cars.
Yeah, I mean, obviously, racehorse syndicates in general have been around for lots and lots of years. We started off with an SPV, so a limited company structure, where people would join together and own shares, equity shares in a company that owned the car. However, that yielded a lot of taxation in terms of the end investors had capital gains tax, and the corporation had corporation tax as well as VAT. So we were looking at a way of trying to
So it's
live
almost
with a
double
better return,
taxation,
and we
right?
looked at other. It was triple, triple
Triple
taxation.
taxation.
However,
Wow.
even then there was still returns for people. We still, even using that structure, were delivering over 20% returns annually net for the first two cars that we did using that structure. Yeah, so 38% gross and 26% net returns. So we were still doing well. As you move into the more institutional investor, the people that want to put 10 to maybe 50, maybe even up to £100,000 into cars, using the fractional model, the level of taxation made it not that attractive. And obviously, when you're comparing it to the more traditional asset classes like property, we wanted to try and make sure we had, a bit more of a USP. So, unlike property, these don't have any tenants or land to worry about. It's very much a real world asset that maintains value. Although it takes some storage, you haven't got to look after it as much as perhaps a property. And then, of course, the CGT element is removed by using a bare trust structure with a beneficiary, which is similar to how the racehorse syndicates have worked for 70, 80, maybe even 100 years. So we sort of thought there's no harm in taking the best of what was traditional, but then mixing it with something that's a bit more digital age. So, although it's a syndication structure, it's all done online, it's all e-sign, it's very accessible. We make sure that everything is modern and as digital as we can make in order to make that investment business process as smooth as possible.
David, I love it. I'm a big car fan, as I've told you before, and on the stream, I think everyone knows it. I've got to ask, in the collection today, what's your personal favorite?
Oh, that's not fair.
I know they're all like your
I think,
kids. You've looked after all of them incredibly well from what I've seen. I saw the video go out on LinkedIn yesterday. Like, it looks amazing. I'm a sucker for that GT3 RS.
Yeah, thank you. And they all have their own personal stories and quirk. I've been a Ferrari guy since I could walk, and so therefore the sort of manual Ferraris hold a really special place in my heart. The 348, especially the last real analog, no ABS, no traction control,
Give
none
me
of
that
that.
gated
That's kind of
shifter any day of the
massively important.
week.
It is, and you've got to almost break two cars ahead because the ABS isn't there. There's no kind of nothing stopping you. It's really your car to drive. But you kind of go back to your nostalgic days and the poster cars of your childhood. And I think some of the cars we've got in here, like the Testarossa, for example, is probably one of those poster cars from my generation. But then moving forward, like I say, the GT3 RSs are more for people in their 30s, and we've even got some more modern stuff like the McLarens that for people in their 20s. We try to cater for a lot of people, and our investment thesis is really about scarcity, so rare numbers, making sure they've either got a manual gearbox or they've got some sort of engineering story, or obviously the big engines, the supercars, and then it's all about the data to find that right point of inflection for when they're depreciated to when they're going to be going back up again, and that's where we try and catch them. That's when we create the syndicates and offer them out, obviously, then to people to come and buy a stake.
How do you go about that data collection, if you don't mind me asking? I don't want to get into the nitty gritties and like give away the secrets of the business, but at a high level, what are you looking at? Are you looking
No.
at ownership? Are you looking at data points from sales of the car in alternative markets, sorry, offshore markets, onshore markets in the UK? Are you looking at numbers? Are you looking at what Ferrari or what the manufacturer is talking about it like? Are they ending the run as an example? Walk me through that.
Yeah, it's exactly. You've got loads of the points there that we hit. I think we collect data from multiple auction houses. The good news about cars is the data's published. There's a lot of recorded sale information you can get from global sales across websites. Like March helped do that as an aggregation service, and there's a number of other, Bonham, Sotheby's, etc. They all publish the auction results. So we collect a lot of data from those sources. We do have other quite sophisticated tools where we look at new entrants to market. So if there's, I don't know, 5 new um, Ferrari 30s put on the website for sale, or trade or somewhere for sale, that's an indicator that supply is increasing, and therefore that's probably a leading indicator to say that the demand's going to fall, and therefore prices won't rise. So that if it's the opposite of that, and we see cars going from 10 available last month to 2 available this month, that's a good leading indicator of positive appreciation. So we use these triggers and kind of guides. We also have key things like you said before around manufacturers looking at runs like the Audi R8 is never going to be made in a petrol variant ever again. That last year. Great now because there is a manual V10. There's no manual ever be made in that car. There might be a hybrid one in future, but never a manual. So another good one to collect. Things like manual gearbox, big engines on the Aston Martin V12 Vantage, another great one. And then the 25-year rule is another fantastic kind of trigger for appreciation, where cars are underserved into a certain market like North America, Australia. When they hit 25 years old, they become classic cars and exempt from all of those things that were keeping them to be released in the first place. And then you get a massive demand from that new market. Obviously, they're not made anymore, so short supply, and that's really what we look for. That kind of low supply, high demand, great recipe for potential appreciation.
Where do you acquire the cars from? Are they from like collectors? Are they from just the open market? Do you have a group of partners that look up, well, not look after, but sell you the cars, knowing that I've got a great asset here? It's not one that's been like ragged, for instance. Do you look at the mileage on them as well when you bring them into the syndicates?
Yeah, so once we've done our kind of curation panel, so we run the firm very much like a sort of investment business. So we have an investment panel that will meet and look at the data to look at what we think are the best assets that we want to go forward, and then that feeds into a car curation panel, and that car curation panel uses a global sourcing network of people that we trust, that we've built up. I've, as I say, been managing collections privately for sort of 25, 28 years. We also have a chap on the curation panel, Nick, who previously ran a dealership, supercar dealership, and is now working on global sourcing as well. So we have these good connections, and the curation panel will then reach out to the network and find the best example of the assets that we can. And then that will then be low mileage, perfect history, great condition. We do paint depth gauges. Every car has a full appraisal report and a personal inspection. Our sort of shareholders can know that they're getting the absolute best of the best when it comes to the asset that we procure. And I think that's really important, and that's why we built up this consistent reputation. We've done 40 successful opportunities now that have been funded, and people have come and seen them at these, our showroom, if you like, here in Nottinghamshire. But also we do course of elegance and London Concours shows every year, and people see the quality of the assets that we bring, and that's really important to us to make sure that they understand it's not just a car, it's the car, and the right one of the make and the model that we've selected on the curation side.
That's incredible. When you Within the syndicates, is there a favorite one that buyers like? Is it the R8? Is it the Ferraris? Which one is currently the vibe at the moment?
I think we're getting more and more discerning people coming to the platform that are looking at the data, that are using it as a real asset class. And therefore, I wouldn't say, there is a passion aspect to this asset class, of course. And therefore, people will have a natural gravitation to a Ferrari man or a Porsche man or lady, for example. But there seems to be now more and more people that are saying, look, I'm fed up of the taxation within real estate. I'm getting quite frustrated with the volatility in, say, crypto and digital markets. I'm looking for something a bit more exciting than VCT ETF or some sort of spreadsheet based investment. And I'd really, really have a passion for something like like a car. And I think that's helped us to attract more investors that don't necessarily mind whether it's a prancing horse or a raging bull on the badge. It's more important that there's got a really strong appreciation case. And that it's the best quality asset out there. And then obviously the returns kind of then speak for themselves, and that's why we get quite a lot of repeat investors that once they bought into one syndicate will create a real diverse collection across Ferrari, Lamborghini, Porsche, Jaguar, Aston Martin, and they'll have 5 or 6 syndicate stakes because that helps them to spread risk even further across the asset class.
What's the goal of the company? Is it just to keep buying cars and keep building syndicates, or is there a larger vision here?
Yeah, there's definitely a larger vision. We're sort of just closed our seed round, and we're looking to probably start, Series A round in 2026, which is going to
Phenomenal.
incorporate, not just the ambition to be kind of the world's, um, sorry, yeah, not just the world's largest asset manager for collectible cars. We want to have over 1,000 assets under management by the end of 2028. We want to have a collection worth $1 billion. That's kind of the aim, that's fractionally owned. But there's bigger ambitions afoot as well. Certainly we would really like to and will create, I think, a big commercial property that houses the assets and is open to both public and investors, that hosts events, is a real community place for people to come and see the assets. Our platform is also agnostic of asset class, so there is an opportunity for us to do watch crowd, wine crowd, and bring on other asset classes and work with partners that are experts in their vertical to create kind of a way of people being able to invest in multiple asset classes. And then my eventual aim has always kind of been to have an index, be able to create a stock exchange for passion assets. So that you and I could trade a piece of your Rolex for my Ferrari, or a piece of someone's, I don't know, Nike Air Max or Air Jordans for a piece of technology. We've got to be able to try to figure out, similar to how the stock exchange works, where you can index companies of different industry types because you use a similar criteria, a similar methodology to value that company and assess that performance. I don't think we're too far away with the world now is with AI and the data to be able to do a similar thing in real time for passion assets. A real-time indice that values a Ferrari against a Rolex, against a champagne, or against a Banksy artwork, and then be able to say they're all worth a certain benchmarked amount against a certain index, and therefore we can start to trade chunks of one for chunks of another, and then you really then have a globally liquid market that I think could be really, really exciting.
I love this idea of like passion investing or having passion assets. It's so much more fun than just this stock that you can't like hold and go and see. And like you can go and, you can touch a Rolex for as an example, or a date like Rolex Daytona. And then you can go and look at the Ferrari or the Porsche or the Lamborghini, the whatever it might be that you've invested in. I think it's lovely that you're creating a space not only for the community that likes that, but then thinking longer term around the index of like, oh wow, we're going to get these kids in that like Air Jordans that are valued at 1,500 Nike Air Mags as an example, and they can trade that asset with someone that's got a fractional investment in a Ferrari 458.
Yeah, I mean that's it, right? This is the way the world's moving. I think we're very, very trying to be very forward thinking. We're trying to incorporate AI into the data analysis pieces as much as we can. Trying to move forward with putting all of the history of the cars on chain, so that we can make sure there's digitized history for every single one of the vehicles and the assets there. And of course, that again is all a move and a step towards helping people to be able to trade a lot easier, because you're removing the paperwork and the offline stuff. And then the other things we've got, the ability to take digital currency is another big thing. So being able to find a way of allowing people to invest in either Bitcoin or whatever kind of currency they're looking at, ETH or
I've got to ask, like, what is the
we're
uptake of that
working with
so
a
far?
company. So far, so we've had a company called Limpid in Portugal that we've done a full investment throughput with. So
Incredible.
they've part funded the GT3 RS with us, and they're looking to do the same with the Aston Martin V12. We're looking to now allow our end investors directly to do crypto. We're partnering with a company called Arrows.io. So we're just working through, I think the technology side of it actually is quite easy. It's then the kind of regulatory, making sure we've got the right compliance, the right KYC, the right, AML checks that go on to make sure we're bringing, we want to make sure we're very robust in terms of our processes to make sure we're bringing the right currency on. We're not just a case of allowing anyone. It's got to be the right investors and the right currency to be able to do that. The digital currency is, I think, going to be a massive market for us because people do want to do more. I think with their crypto and obviously placing that into a real world asset can be a really really good idea and a much more stable idea for growth moving forward.
No, I completely agree, and I think like taking that crypto asset as something that's super highly volatile and putting it into something that you know you're going to get consistent returns out of, it sort of alleviates a certain amount of pressure off the investor, especially if you've got into it quite quickly. At least you can look and feel the thing if you don't understand the technology that underpins blockchain.
Yeah, yeah, definitely. And we're also looking at things like a virtual garage, and having this whole thing existing in virtual reality. So there's no reason I don't see why we couldn't create the future where you're able to sort of move around your virtual world, meet people in a community basis, real world, and also in virtual, and then trade various elements of what you think is the fastest appreciating asset versus somebody else, and create that actual market for passion asset investment. And that's kind of the vision of where we'd like to get to, having a real world space and virtual space that kind of mirror each other. And the technology is moving there. The regulation is going to be one of the key challenges because obviously we've got to keep people safe and make sure they understand what they're investing in and make sure that that we're doing this right and there's the right information out there for people to make informed decisions. I think that's a key thing for us. We've been going for 5 years now. We've got nearly 1,000 active investors, and we want to make sure we keep going with the reputation of delivering very solid opportunities for people to invest in, but also in a very safe, secure way, and give as much liquidity as possible. So if circumstances change, people are able to be able to get out, not trapped. Those sorts of things are really kind of important principles for us.
When people invest in the syndicates, what do they typically don't understand about them?
Oh, that's a great question. I never asked that. Don't understand. I think a lot of people, are just curious about how it works. Like, what does their allocation actually mean? So, we have to get across that it's their car. That's kind of the big thing. I think a lot of people expect, because obviously people are used to investing in funds, for example, they'll say, well, I'll give you 50K, and then they just assume that's it. Whereas we really like to create, as I say, the community aspect and make them understand that it's their decisions. So with the syndicates, the individuals that own the allocations within that syndicate, they vote on when to sell the asset. So it's very much a day-to-day decision-making aspect is with the investors, with them, people who hold the allocations. We create market reports and give you information, but at the end of the day, it's a real stake that you own as a co-owner of that car. You are a benefit. You have to yeah, you have a number of decisions you have to make through the life cycle. So we need your input. We want people to be engaged with the business. I think that's something that's a bit of a surprise because a lot of investments are very faceless and it's kind of dump your money and never see it again for 3 or 4 years. Whereas with us, we do like to keep that engagement going, and that keeping part of the process.
How often do they actually come down and see the cars, or do they quite just literally just park the money in this fractional investment?
No, we see quite a lot of investors. I mean, we're doing a Cars and Coffee on the 17th of August, I think. So we'll invite people down. We'll probably get somewhere near sort of 70 to 100 cars will arrive and come and see the cars. We do, as I say, lots of events up the country. We did Grant Nicol with Super Driver. We've done both the London Concourse and Hampton Court Concourse of Elegance shows this year. With that, we normally have between 30 and 40 invitations that will sort of reach out to people on the investment groups, and then we just have anybody can access at any time. They can email us and come and turn up. We've had husbands and wives come and sit in cars that they had when they first got married, so it was kind of a nostalgic aspect for them. And we have families come a lot, dads that have invested that then bring their sons, daughters, and wives on the way up to or the way down to wherever they're going. They'll stop in. You can see we've got the signal's not great. We've got a unit here where people can come and sit with us and have a coffee and we'll see collection. And that's on a weekly basis. So I think I think it's the future. I think you should be engaged with your investments. You should be educated. You should be understanding what you're investing in, and you should be engaged with it. I think I see personally in the wealth investment news and other bits, too often people have just left their money, and then 10 years later the pot's got so much smaller than they expected because it's been mismanaged, mistreated. But it's because they're so far removed. I think we're very keen to make this a very inclusive opportunity.
How, when it comes to liquidity and people wanting to pull their money out, how often does that happen? And is it quite difficult to manage that liquidity given the fact that it's a physical asset?
Yeah, so I guess there's two parts to that. I guess we have had five people, I think, out of 970 odd completed individual investments. We've had five, I think, that have asked for money back. So that's kind of 0.5%, somewhere in that region. We've given liquidity to all of those, either by buying the shares ourselves or by offering them for sale for other people as a kind of a as a they call it the bulletin board style secondary market. So allowing people to take up the shares. Um, with the new syndicate arrangement, it's easier because we don't have to go through share transfer processes, so we can offer liquidity easier. And obviously, if the asset's appreciating, the chances of being able to have the liquidity are very strong because the other people in the syndicate, knowing they're making returns, one of them is likely to want to buy your syndicate because they can increase the stake in something that's generating them returns. So we haven't had an issue with liquidity. We're also incredibly transparent on the way in. So we use all the principles of treating customers fairly and making sure everything is clear and transparent in our communication. So, we set the expectation up front that this isn't something that's going to be a 2-week hold. You are needing to be in for up to a maximum term of 5 years. We expect the average hold to be 3 to 5 years. So, we set that expectation up front. And I think that helps with people knowing with going in with their eyes open that they're not going to have the money back unless they need to have the liquidity. And then again, of course, we talked about it earlier. Having the annual vote also helps because people can, feel like they're included in the decision making when that asset is sold or when it's kept.
Talk to me about average returns. Like, what do you get out of this, right? Is it like a 9%? Is it a 5%? Or is it significantly larger than we perceive?
Yeah, it's good. It's going well. So we were 15.8% last year on 2024. So full year
That's
24 average
nuts.
return. We've adjusted that down, so we're down at 12.7% now. So we've gone down a few percent because the overall collectible car market is correcting, but the overall market's seen an 8% drop, and we've seen just over 2%. So we're outstripping the market performance because of our investment thesis, because we have the right cars, and we can try and pick them at the right times, but also with the right thesis. So you're not in the 5 or 10% region. We're above that 12.7% at the moment. Obviously, it's capital gains tax free because cars are considered chattel. So they're awaiting asset or they're exempt from the new structure allows you that will return to the GT3. We have had two active exits, both in 2023, to be fair. So the two syndicates that first wrapped up, both of those delivered over 35% returns for investors annualized. So there can be, really big wins. We're not crypto returns for thousands, but it's a real physical, stored, insured, managed, the risk if the car isn't a bad and what else to maintain our track record as a set. I appreciate you say of 40 odd investments over the last nearly 5 years has shown that we that on a consistent basis.
Yeah, you can't. I don't think you can really pump and dump a car the same way you can do it to crypto, right? It's just it doesn't work that way. Before we let you go, I have to ask, what is the one car that you need in the collection for the investors? Is there one that you've had your eyes on where you think long term this is a bet that we're going to make, a very calculated bet that we're going to make, and we're going to deliver returns to our investors? Is it a P1 as an example? Is it a 250 GTO? You got to give me something here.
Yeah, something definitely more modern. So 250 GTO, fantastic. And I think blue chip investment wise, great. But no, we're looking at the ones that have got room to get to where the 250 GTO is. So we want people that are buying in now at 500k or a million that see their assets being exited 10 20 rather than buying the 10 to 20 that might get to 30. So the Ferrari F40 is definitely the one we've got our eye on for sure. They've already grown from sort of 800k 5 years ago to 12 million. I think they've got room to get to close to sort of 5 million, maybe even 7 million in the next 5 years. The F50 is another one as well that is already to that 5 million mark, get 10, maybe even higher. GT is a plastic manual V10 car with the engine derived for Formula One. Very unrepeatable project that Porsche did, and the circumstance of F1 changing the engines to V6s meant that all of that engineering part put it in GT and still gearbox. So that car is a story. That's from the fact they've got a fantastic niche and a chance to get so those sorts of we're considered as car syndicates for to 5, I think. Exclusive to the F1 starting at the end of August with the Supercar driver. That will be 100k minimum buy-in, so that's much more of a higher syndicate than 1.4 with the F40. But then we also make sure it's accessible at the lower level. So we have an Aston V12 Vantage at the moment, which is just over 1,000 ever made. And that's at £2,000 for allocation and 33 allocations. So we do vary. We make sure that people can get in for whatever level they want. And of course, if you want to buy the whole car, we'll also support globally with sourcing cars for individual collections as well. So it doesn't have to be a syndicate. You can also come and we can buy a full collection for people and manage that as well.
Oh, I love it. So it's not just a fraction investment that you make. You can just be a one-stop shop for I need to source a car. Let's go get one.
Yeah, we have a private office, which work with a few sales, a few presenters and things, as well as your people maybe have just exited a business and they've got kind of 20 million or something. They don't want to invest it all into traditional markets like property. They might think I'll have 1 million in cars. And obviously, we help them use our investment thesis. They have access to the same investment thesis as the fractional side, but we curate the collections individually for them. So that's why we've got 3 GT3 RSs now in the collection, because one of them is a fractional one and 2 of them have been bought for private individuals that saw our analysis on the fractional side and said, well, actually, I'd like one of those for my collection. Can you come and help us source them? And because we're known in the market now for sourcing these cars, we can support people to get access to under retail deals, because we buy kind of through our work and through our collections globally. So yeah, we do the same for private individuals as we do for those who have joined together to join a syndicate.
I think if I ended up engaging in a fractional investment with you, I think I just want the whole car, because if we got into a GT3 RS, David, we are getting round the circuit at Silverstone or Spa. There is no way that thing is just sitting in the showroom.
Yeah, and that is always the double-edged sword, isn't it? With cars, we get that's probably the main question we get asked is, "Can I drive the car?" Look, we can create syndicates for people who want to drive the car. If you've got 4 or 5 mates that want to share an Audi R8 and drive a track car, we can help you with that. Create all the legal documents, but first and foremost, we're trying to democratize the asset class and give people access. So these cars are museum stored. So unfortunately, you'd have to buy it yourself if you wanted to drive it. But that is something we do. We do allow people, or we do source cars for people who want to drive them a bit but still make money. It's not completely oil and water. There are cars that you can use sparingly and look after well and still make some really strong returns, the F40 being one that's done that over the last 4 or 5 years especially.
David, this has been a lot of fun. I'm looking forward to coming up and seeing the showroom. Maybe we do a live stream from there one day and build a docket of like the car influencers, the kind of the car geeks that can come in and talk about it, get some of the car guys from the manufacturers on, and stream from the showroom.
Let's do that. Let's do that 100%. Yes.
Yeah, let's figure out a way.
16,000 square foot here, 150 cars. So come up anytime and we'll definitely do that. Yeah, that'd be fantastic.
Wonderful. David, this is awesome. I'll see you soon.
Thanks very much. Bye.